Two properties on the same street in Fort Lauderdale, same price, same size, same neighborhood. One costs $8,000 a year to insure, the other one costs $28,000. The difference is the flood zone elevation and the elevation certificate. And if you don't understand both of these things before you make your offer, you're making an uneducated decision. In this video, we're going over everything a Fort Lauderdale luxury buyer needs to understand about flood zones and insurance before closing, what the zone classifications actually mean, how to read a flood map, what an elevation certificate tells you, and the specific insurance investigations that need to happen during your inspection period rather than after it. My name is Steve McAleer. I've been selling real estate in Fort Lauderdale for 20 years, completed over 600 transactions in this market, and I work with The Agency, one of the premier luxury brokerages in the country. I make this video because the insurance and flood zone conversation is the one that catches buyers off guard more consistently than almost any other aspect of a Fort Lauderdale luxury purchase. Buyers who do this due diligence correctly before they commit avoid expensive surprises. Buyers who skip it discover the insurance reality after closing, when there is nothing to be done about it. Let me give you the framework that prevents that. FEMA administers the National Flood Insurance Program and creates the flood maps that determines everybody's property flood zone designation. These designations are not uniform across all of Fort Lauderdale. The flood zone classifications that matter most for Fort Lauderdale buyers fall into two broad categories: high risk and moderate to low risk. Understanding which category your target property falls into and what it means within that category is the starting point for any insurance conversation. Flood X is the designation that carries the lowest flood risk. Areas that FEMA has determined are outside the 500-year floodplain. Flood insurance is not federally required in Zone X for properties with federally backed mortgages, though private lenders may impose their own requirements. The premium for voluntary flood insurance in Zone X is typically low, in most cases $500 to $1,500 per year for a luxury property. For buyers who prefer to carry flood coverage even where it's not required, Zone X properties are the most affordable to protect. Zone AE is the designation that carries the most significant financial consequences for Fort Lauderdale buyers, and it's the zone that covers the majority of the city's waterfront and low-lying residential areas. Zone AE properties sit within the 100-year floodplain, meaning FEMA has determined there is a 1% or greater chance of flooding in any given year. Flood insurance is mandatory for Zone AE properties with federally backed mortgages. The premium for that insurance depends heavily on the elevation certificate, specifically how high the lowest floor of the structure sits above the base flood elevation established by FEMA for that location. The difference between a property that sits 1 foot below base flood elevation and one that sits 3 feet above it can mean a difference of $10,000 to $20,000 or more per year in flood insurance premium on a luxury Fort Lauderdale property. Zone VE applies to coastal areas subject to wave action in addition to flooding, the highest risk designation under the FEMA system. Properties directly on the ocean, on exposed intracoastal banks, or in areas where storm surge combined with wave action creates a compounded flood risk may carry Zone VE designations. The insurance requirements and premiums in Zone VE are the most substantial of any designation, and the construction standards required for properties in this zone are the most demanding. Direct oceanfront property and certain intracoastal frontage positions in Fort Lauderdale may fall into this category. The critical point that buyers must understand is that flood zone designations do not follow neighborhood boundaries or property tax district lines. Two homes on the same street can be in different flood zones based on their specific elevation, their proximity to drainage infrastructure, and the microtopography of their specific parcel. The only way to know the zone for a specific property is to verify it directly, not to assume it based on the neighborhood's general reputation, the listing agent's representation, or what the neighboring property's designation is. FEMA's flood maps, or FIRMs, called flood insurance rate maps, are publicly available and will be your primary reference document. Knowing how to navigate this will serve you well throughout the home buying process. The FEMA Flood Map Service Center at msc.fema.gov is the public portal where you can look up any address and see its flood zone designation on the current effective FIRM for that location. For most Fort Lauderdale addresses, the process involves entering the property address, identifying the relevant map panel, and locating the property on the map to determine which zone color it falls within. Zone X areas appear in white or light shading. Zone AE areas appear in darker shading. Zone VE areas areas have their own distinct marking. The limitation of reading the flood map yourself is that the maps are static. They reflect FEMA's last update for that specific panel, which may not incorporate recent drainage improvements, updated topographic data, or the actual elevation of the specific structure on the lot. The flood map tells you the zone. The elevation certificate tells you the specific property's relationship to the base flood elevation within that zone, and that relationship is what drives the insurance premium. FEMA flood maps are updated through a process called map amendments and revisions. Properties that are shown in Zone AE on the current effective map may have had a letter of map amendment called a LOMA issued that removes them from the flood zone based on a demonstrated elevation above the base flood elevation. If a LOMA exists for a property, it can dramatically change the insurance picture by removing the mandatory flood insurance requirement for a federally backed mortgage. Always ask whether a LOMA exists for any Zone AE property you're considering. Your agent or your attorney can verify this through FEMA's database. The practical instruction for the buying process: pull the flood map for any property that you're seriously considering before you make an offer. Know the flood zone designation before you are emotionally committed to the property. Then request the elevation certificate, which is distinct from the flood map, during your due diligence period process to understand the premium implications within that zone. The elevation certificate is the document that translates your flood zone into an actual insurance quote. This is the single most important documentation for any Fort Lauderdale luxury buyer. An elevation certificate is prepared by a licensed surveyor and documents the elevation of the lowest floor of the structure, the finished floor of the lowest occupied level, relative to the base flood elevation established by FEMA for that location. If the BFE for a Zone AE property is 8 feet above sea level and the lowest floor of the home is at 9 feet, the property is 1 foot above BFE, and the insurance premium reflects that relatively favorable position. If the lowest floor is at 6 feet, the property is 2 feet below BFE, and that insurance premium reflects that exposure significantly. The premium differential created by elevation relative to BFE is substantial at the luxury property level. A waterfront home in Fort Lauderdale that sits 3 feet above BFE might carry a flood insurance premium of $3,000 to $5,000 per year. The same home in the same zone with a lowest floor 2 feet below BFE might carry a premium of $15,000 to $25,000 or more. The elevation certificate is the document that determines which scenario applies to the specific property you're considering. Elevation certificates are not always current or always available. Some sellers have elevation certificates prepared when the property was purchased or when the home was constructed. If the structure has been elevated, raised on pilings or a stem wall, or through fill since the last elevation certificate was prepared, the certificate may understate the property's current elevation and therefore overstate the insurance cost. Conversely, if the property has been altered in ways that lowered the finished floor, the certificate may not reflect the current exposure. For any property where you are relying on the elevation certificate to assess insurance costs, verify that the certificate is current and accurately reflects the structure as it exists today. If an elevation certificate does not exist for a property you are seriously considering, you can order one from a licensed surveyor during your inspection period. The cost is typically $300 to $600, and it's among the best due diligence expenditures in Fort Lauderdale's luxury market. The information it provides directly informs your insurance quotes and can materially affect your all-in cost of ownership calculation. And by the way, if you're seriously looking to make a move to Fort Lauderdale, I've put together a great resource for you. It's called the Fort Lauderdale Homebuyer Guide. Inside includes information about every neighborhood, every price point, what to buy, what to consider, and how to move here without second-guessing yourself. It's a great starting point, and it's totally free. You can download it using the link in the description. Moving forward, let's go over the Florida insurance market in 2026. Florida's private homeowners insurance market has experienced significant carrier exits and premium increases over the past several years. Multiple national carriers have reduced or eliminated their Florida exposure. The carriers that remain in the market have tightened underwriting standards, increased premiums, and placed greater emphasis on specific property risk factors than they did in previous years. The result is an insurance landscape where the cost and availability of coverage varies more from property to property than buyers from most other states are accustomed to. The roof age is the most significant variable in the Florida homeowners insurance underwriting decision after the flood zone. Depending on the roof type, a property with a roof that is less than 5 years old will receive meaningfully better rate treatment than a property with a roof that's 12 years old, which will receive meaningfully better treatment than a property with a roof that's 17 years old. At 15 years, most Florida carriers begin restricting coverage or requiring roof replacement as a condition of a new policy issuance. At 20 years, carrier options are severely limited, and the available coverage typically typically comes at substantially higher premiums through the surplus lines market or Citizens Property Insurance, the state's insurer of last resort. The practical implication for buyers: before you make an offer on any Fort Lauderdale property, know the roof age and get at least 2 insurance quotes. The quotes could be from carriers that are actually writing new policies in Broward County, not carriers that are in runoff or that have exited the market. And that should reflect the actual property characteristics, including the roof age, the construction type, the opening protection status, and the elevation certificate data if applicable. Wind mitigation features such as impact windows and doors, hurricane straps, and hip roof geometry reduce your wind insurance premium and should be documented in a wind mitigation inspection report prepared by a licensed inspector. A property with full impact glass throughout typically saves $2,000 to $6,000 or more per year in wind premium compared to an equivalent property without the impact protection. The wind mitigation report is prepared during your inspection period and goes directly to your insurance carrier. Citizens Property Insurance, which is Florida's state-backed insurer of last resort, has been actively working to reduce its exposure through a process called depopulation, where Citizens policies are moved to private carriers. If a property you're purchasing is currently insured through Citizens, you may be required to accept a private carrier replacement as a condition of your purchase if a private carrier finds the property insurable. Understanding the current insurer and the insurability of the property in the private market is part of the due diligence that should happen during your inspection period. Now, here's the specific sequence that I recommend to every buyer in this market. Before making an offer, verify the flood zone designation from FEMA's Flood Map Service Center directly. Do not rely on the listing description or the seller's representation. Know whether the property is Zone X, Zone AE, Zone VE, or any other designation, and understand the preliminary insurance implications of that designation before you decide whether to proceed with an offer. Ask your agent to request the existing elevation certificate from the seller. If one exists, review it and provide it to at least 2 insurance carriers for preliminary flood insurance quotes before you make an offer. If one does not exist, understand that you will need to order one during your inspection period and that the result could meaningfully change your insurance picture. For a property where the flood zone designation suggests significant flood insurance exposure, I recommend ordering the elevation certificate before making an offer rather than after. The cost is minimal and the information it provides is material to your offer decision. Get preliminary homeowners insurance quotes before you make an offer on any property above $1.5 million. These quotes are non-binding at this stage, but they can give you a real carrying cost picture that the listing price alone does not provide. The carrier, your agent, or your attorney can facilitate the preliminary quote process. At minimum, know the roof age and the opening protection status before you engage carriers for quotes. These are the 2 variables that most directly determine whether coverage is available at a reasonable premium. During the inspection period, complete the 4-point inspection, the wind mitigation inspection, and the elevation certificate if one was not available prior to the offer. Get firm insurance quotes, not preliminary estimates, from at least 3 carriers for both homeowners and flood insurance. Review the insurance results alongside the inspection findings with your real estate agent to determine whether the coverage picture materially changes the economics of the transaction. The decision point at the end of the inspection period should incorporate the full insurance picture, not just the property inspection results. A home that passes inspection beautifully, but carries $35,000 per year in combined homeowners and flood insurance due to its flood zone and roof age is a different financial position than what the listing price suggests. That difference needs to be factored into your decision to proceed, to renegotiate, or to exit during the inspection period, not discovered after closing. Now, let me close out with an actual framework that I recommend to every buyer in the luxury market today. Insurance diligence in this market is not a closing formality. It's a pre-offer investigation that directly affects whether a specific property makes financial sense at its asking price. The buyers who arrive in Fort Lauderdale understanding this do their insurance homework before they fall in love with the property and make decisions that reflect the full cost of ownership. The buyers who skip this step discover the insurance reality after closing, when the policy is issued and the premium is what it is. The combination of flood insurance and homeowners insurance on a Fort Lauderdale luxury waterfront property can range from $8,000 to $50,000 or more depending on the flood zone, the elevation certificate, the roof age, the construction type, and the opening protection. That range represents a meaningful difference in monthly carrying costs that compounds significantly over a multi-year holding period. Understanding where a specific property falls within that range before you make an offer is not optional due diligence. It's the foundation of an informed purchase decision in this market. And that takes us to the end of this video. When you're ready to make your move to Fort Lauderdale, you can contact me using the details below.